This week, we reached 3,000 subscribers. Can you believe it? I never thought that we were going to get over 1,000 subscribers, and now we're at 3,000. Guys, thank you so much, all of you that have subscribed, that you are there every day when we live stream. It's such an amazing accomplishment for our community, and I can't thank you enough. So I was thinking, what could we do special for a 3,000 celebration? And I figured, hey, what would be the most useful thing that I could give you guys right now? And I think that it is how to trade fast markets. We've had some really turbulent markets lately, and we're going into an election, so we're likely to have some turbulence in the future. Really, every time that I think things are going to calm down, something else happens, and then everything just flares up again. Now, luckily for me, this is kind of the markets that I like to trade. It's kind of what I specialize in. So let's talk about it. How do you trade fast markets? Let's do it. And yes, I am Speculator Seth. I stream my live trading session every day from 8:30 to 10:30 Eastern Time. So click that subscribe button and click the bell icon. If you click the bell icon, it makes it much easier to follow the channel and will give you notifications when we're going live. And all of those trading sessions are saved. So go back and look at what was a day that was really volatile in the markets, and then go back and see what we did. And, maybe I did well that day, or maybe I did poorly, but you'll be able to watch the order flow. You'll be able to follow it for yourself. And that is one way that you can get experience for trading these volatile markets. As always, I really want to know what you guys think. Let me know what your tips are below, and tell me some of your stories. What were some of your most memorable turbulent market events? Now, first, before I get into my tips, I have to give the disclaimers, right? Trading volatile markets involves substantial risk of loss and is not suitable for all investors. And that's why the first tip that I'm going to give you is you don't have to trade it, all right? One of the most important skills that you as a trader can develop is knowing when to trade and when not to trade. Understand what the market conditions are. Understand what kind of conditions are favorable to your strategy, and know when you should trade and when you shouldn't. All right. Preservation of capital should be the first thing on your mind. And if the conditions are not favorable to you, just don't trade it. There's so many things I could say here because I just know everybody does it. They trade. I do it all the time. You trade a market that is just way too volatile. And this is when traders blow their accounts. I can think of during this coronavirus crisis, I didn't trade it. It was way too crazy. I like fast markets, but man, when it's like, 7% limit down and they're halting the futures, that was too crazy for me. And you know what? It was the right decision. I traded it on Sim. I could have made a lot of really bad trades. I know a lot of people that blew accounts during those times because there was just so much going on that we didn't understand. Guys, I just can't stress it enough. Preservation of capital should be your number one priority. Now, with all of that said, if you trade fast markets, there can be substantial rewards. And this is a situation where you can develop some significant advantage over other market participants. One of the things is that as a small trader, you can be fast and nimble. You can get in exactly where you want to and where you want to get out. And these big institutions, they're moving huge sums of money and they cannot do that quickly. And that puts you at a big advantage. And you can develop edges over other traders because you can understand this action. You can understand what's going on. And that's going to be a huge edge compared to a lot of market participants. The majority of retail traders that really don't completely understand these things and how to trade these markets. So it's absolutely worth it to try and develop this skill and learn how to trade volatile markets. Now, if you're going to trade volatile markets, the first thing that you should understand is you got to have the right tools, all right? So I have a lot of videos about these sorts of things. For instance, I have a video over here about which computer hardware you should use. But one of the biggest things that I want to stress is the use of the DOM as a tool in fast markets. The depth of market is probably the most important tool in your toolbox during these situations. The depth of market allows you to enter orders, whether it be a market, a limit, or a stop order, at exactly the prices that you need. It allows you to see what the liquidity is, to see where people are trading at, and it allows you to put several different markets all up on your screen next to each other so that you can see the correlations and get a full view of the market quickly. And so this is what allows you to be fast and nimble. I use the Jigsaw DOM. If you choose to purchase it, I do have an affiliate code that I will put in the video description below that will help the channel out if you decide to purchase it. And I also have a video over here that explains why I use what I do. But I should say that there are alternatives. I think that Sierra Charts has an acceptable DOM. I think that Trading Technologies has a good DOM. But I really like the Jigsaw DOM, and the thing that I like so much about it, in addition to it showing you the market orders hitting into the limit orders in the current trades columns, but I also just really like the way that the interface works. How you move the orders around and where you click to put a market order versus a limit order is not only intuitive, but extremely well tuned to trading in a fast market. So it's a really important tool, and it's something that you should consider. The next tool that I think you need to have in your pocket is the ability to trade futures. So this is going out to all of the guys trading options. I know YOLO options is a really big thing right now, but in these volatile markets, you really want to be trading futures. And here is why. One of the problems that you will have in a volatile market is that a lot of the liquidity dries up. Now, this can be an advantage for you because it means less competition for those market making opportunities. But when liquidity gets too low, that also means that you might not be able to get filled where you want. So trading a really liquid, popular instrument can be really useful in volatile markets. And so that's why I would pay particular attention to the S&P 500 mini futures and the 10-year treasury futures. These are the most liquid instruments in the world, and they are very economically sensitive. So when you're having that turbulent market, these instruments are going to move, and they're going to be the best places to take advantage of it, especially when markets are going down, because when markets are going down, it seems like just everything goes down together. And so why bother trading individual shares? Just trade the index, and don't discount or dismiss what you can accomplish with the 10-year treasury, because it is, in my experience, easier to make money on something that is going up than when something is going down. When something is going down, you have all of these guys trying to fight to save their profits, and there's real choppy. Whereas when you're trying to get into something, everybody just wants to get whatever the best price that they can get in. And if you can get in early on the thing that's going up, where the flight to safety is, that is a much easier trade. I know that a lot of you don't like the treasuries because they can be slow, but in the crazy environment, it is really advantageous to understand the treasuries. So I would have that skill, that knowledge about how the treasuries trade in your back pocket. Now, my next tip is you need to understand what is going on. And what I mean by that is you should be reading the news regularly. You should understand how the markets and how the business works. You should have a good news squawk and have all of your Twitter feeds up so that when things happen, you understand what's going on. What you don't want to be doing is you had a huge move come out of nowhere and you enter it and you have no clue what's going on. And then you go and you start reading on Twitter and you find out that, oh, it's probably actually just a fluke and you're going to lose money on it. Okay. Understand what's going on. This is your advantage in these kinds of markets. The robots, they don't know what's going on. These are situations that have never happened before. Nobody really knows exactly what is going to happen. But if you are informed, if you are knowledgeable, you will know how your specific markets that you specialize in are going to react. And this is a huge advantage in the chaos. My next tip is understand the volatility and average true range and adjust your trades accordingly. So I have a video over here about how I use the VIX to estimate the estimated range for the day, and this can give you really good profit targets. But when things are moving that far, you kind of have to understand how far it can move and how much risk you can take, and then size your positions accordingly. And in this kind of a situation, the recommendation that I would make is to reduce your risk, because oftentimes you're going to have to set yourself a larger stop, and that means you should trade less contracts. Now, if you're trading like a full E-mini contract, then now would be a good time to just trade some micro contracts. I know that the commissions are a little bit more in terms of what you make for the micro contracts, but the risk is going to be more appropriate for your account. Another thing that you can do in a situation like this is just don't be afraid to get stopped out a few times in order to catch that big winner. So usually when I trade, I have a really good idea of where I think it is going to do. And because I have that target already set out, I can adjust my risk accordingly. And sometimes if, I think it's going to go 100 times further than what my normal stop is going to be, then it's okay if I get stopped out a couple of times. And this is where, these markets can be really, really scary. But when you realize how big the rewards are, it makes it a little bit easier to say, hey, I can try a couple of times. And if I catch a winner and it runs, then I'm going to make a ton. And if I don't, then, I have an averagely bad day and I can just stop right there and it's okay. Just understand what the potential rewards are and what the potential risks are, how far the market is moving at that time, and adjust accordingly. In addition to knowing what the volatility and average true range is doing, I would highly recommend watching multiple instruments. What you want to understand is where is the money moving from and where is the money moving to, and positioning yourself accordingly. As I already mentioned with the 10-year treasury, it is a much easier trade oftentimes to get into the thing where the flight to safety is. And if you're able to get into that flight to safety asset quickly, you can have some really easy trades. But understanding especially things like where all of the currencies are moving, the dollar index, different assets, so not just the E-mini, but what the treasuries are doing, what gold is doing, what oil is doing. Looking at all of these different correlated instruments can be really important, and again, give you a leg up against other participants. And this is where, again, I really like using the DOM, because you can get a very quick glance at what all of the markets are doing. You don't even have to take your eyes off of the instrument that you're trading. You can just see it in the corner of your eye. And the last tip I want to leave with you is the first trade is usually the best trade. And it kind of makes sense why. I mean, think about it. If you are having some big news event, some change that has changed market participants' expectations of the future, the faster that you can take advantage of that change in expectations, the easier of a time that you're going to have. You don't want to be one of those guys that gets in much later after basically everybody understands what's going on, because then you're just caught in the chop. That's where you have a bunch of guys FOMOing into positions and getting caught in liquidity vacuums and getting stopped out by sharks, and you don't want to be involved in that mess. If you can just catch the early trade and be out, that's great. Or hey, if you really understand what the situation is and you know that it's going to run, then let it run. I can't tell you how many times I've taken a trade where I had an amazing trade and then I decided to keep going because I was doing well and gave it up later. Man, know when to quit. If you caught the winner, good job. You got it. Let it run or just be done for the day. But the longer on that you go, the tendency is that the action is going to get harder, and you yourself are going to become fatigued. You're going to trade worse and worse and worse. And this, again, is one of the ways that a lot of traders blow accounts, is that they miss the good trade and then they FOMO into it, they lose, and then they think, well, it's going to keep going, and so I'm going to try and take this a couple of times, and now you're revenge trading, and then you do the worst thing, you size up, and it's just, no, don't mess with that. Catch the early trade, and if you miss it, hey, there can be opportunities, so I'm not going to say don't trade it, but sometimes you just missed it and you missed it. All right. That's probably the best piece of advice I can give you specific to trading fast markets. I think that's all we have time for today. But again, like I said, 3,000 subscribers. Thank you guys so much. We have so much more to come. So please, if you found this video helpful, click that like button. Let me know in the comments what was some of your most memorable crazy markets. I will see you guys when I stream in the morning. And in the meantime, stay profitable, friends.